Good morning, and welcome to today's discussion. I'm Sonia.
And I'm Simon. We'll be covering several key stories in the world of finance and technology.
Let's start with Alphabet Inc., the parent company of Google. Recent reports highlight its prominence in investment portfolios, particularly in AI-focused strategies.
That's interesting. What makes Alphabet a standout in this area?
According to the reports, Alphabet's shares have seen significant gains, up 121% over the past year and 18% year to date. This performance is attributed to its strong position in the tech industry, particularly with its Google Cloud services.
So, the collaboration with IBM on the Google Cloud practice is a key development here.
Exactly. The new practice aims to enhance enterprise AI scaling and modernize core systems. This integration of IBM Consulting Advantage with Google Cloud's Gemini technology is expected to drive significant advancements in AI capabilities for enterprises.
How does this impact the broader AI landscape?
The move underscores the growing importance of AI in business operations and the need for scalable, efficient AI solutions. Alphabet's involvement in this space, backed by its technological prowess and financial performance, positions it as a leader.
That makes sense. What about other investors' perspectives on Alphabet?
Billionaire Ken Fisher's portfolio, for instance, includes Alphabet as a top AI stock. The firm's confidence in Alphabet is reflected in its significant holdings.
And what about Jim Cramer's recent comments on Alphabet's stock strategy?
Jim Cramer highlighted Alphabet's stock repurchases as a significant factor, suggesting that there may be underlying developments in the underwriting process that are worth noting.
So it seems like there's a consensus on Alphabet's strength in the AI and tech sectors.
Yes, and its financial performance supports this view. Now, let's move on to another story.
NVIDIA's recent deals with South Korean tech giants are quite noteworthy. Can you elaborate on these agreements?
NVIDIA has announced a series of deals with major South Korean companies, including SK Hynix and Navar. These partnerships are aimed at advancing NVIDIA's AI ambitions by securing crucial memory chips and attracting new customers.
What are the implications of these deals for NVIDIA's AI strategy?
The agreements underscore NVIDIA's commitment to driving the AI boom. By collaborating with key players like SK Hynix, a leading supplier of high-bandwidth memory chips, NVIDIA is positioning itself to meet the growing demand for AI computing power.
How does this fit into NVIDIA's broader business strategy?
NVIDIA's CEO, Jensen Huang, has been actively engaging with South Korean corporate leaders, emphasizing the company's focus on building AI data centers and leveraging its technology. This is part of NVIDIA's effort to continue driving innovation in the AI space.
That's a significant development. Let's shift gears to another story.
The International Monetary Fund has released its outlook on Kyrgyzstan's reserve money, indicating stability in 2027 following recent strong expansion.
What are the key points from the IMF's report on Kyrgyzstan's economic outlook?
The IMF expects Kyrgyzstan's current account deficit to narrow steadily over the medium term. Additionally, the country's gross international reserves are projected to cover more than 3 months of imports through 2031.
How does this impact Kyrgyzstan's economic stability?
The stable reserve money growth and adequate reserve coverage are positive indicators for Kyrgyzstan's economic stability. It suggests that the country is well positioned to manage its external finances.
That's reassuring. What about the external debt service burden?
According to the IMF, Kyrgyzstan's external public debt service burden is expected to remain moderate through most of the forecast period before rising at the end of the decade.
Let's move on to another story.
Recent data shows that U.S. airlines spent nearly $6.5 billion on jet fuel in April, a significant increase from the previous year.
That's a substantial jump. What factors contributed to this increase?
The Bureau of Transportation Statistics reports that the expenditure rose by 78%, despite a slight decrease in fuel consumption. This is largely due to higher fuel prices.
How are airlines responding to these increased costs?
Airlines are raising airfares and fees, cutting perks, and adjusting their flight schedules to contain costs. The industry's top global trade group has warned that soaring energy costs could nearly halve profits in 2026.
That's a challenging situation. Let's look at another story.
Oil prices surged over $2 per barrel following Israel's renewed strikes on Lebanon, despite a truce between the two countries.
What triggered this price jump?
The renewed violence in the region raised concerns about the potential disruption of oil flows through the Strait of Hormuz, a critical conduit for global oil and gas supplies.
How significant is the Strait of Hormuz for global oil markets?
The Strait of Hormuz is a vital choke point for international oil trade. Any disruption to this route can have significant implications for global oil prices and supply.
It seems like geopolitical tensions are playing a major role in the current market dynamics.
Absolutely. The situation in the Middle East is closely watched by market participants due to its potential impact on oil supplies and prices.
As we wrap up today's discussion, it's clear that there are several key factors influencing the markets and economy.
Indeed, from technological advancements and investment strategies to geopolitical developments and economic outlooks, there's a lot to consider.
Well, that's all for today's episode. Thank you for tuning in.
Thank you, and we'll see you next time.